The stock market erupted higher once again, giving good tidings to all investors here this holiday season. We were up 1.3% on the S&P 500, which closed near its all-time high. But once again, the star of the show was the small cap index, the Russell 2000, hitting an all-time high, up well over 2% here today. So we'll take a look at what that means for our posture. Then we'll get into our trade application example, where we discuss the largest tech stock on the planet and some recent news that pushed its price higher. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 15th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ, and we appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we do have a presence on Facebook as well. Feel free to join our group at that web address you see in the logo in front of you. All right, so let's go ahead and jump into the activity. And as you can see, I've got the chart 6D pulled up here in front of us for those of you that are premium members following along at home with your own charting package. I usually start with this particular chart whenever we have at least a 1% move in either direction, either up or down. And fortunately, at least for the bulls, today was another aggressive buying day. And so you'll see here that this green bar is up and over this blue horizontal line. The blue horizontal line is a 1% move, and that green bar signifies that it was an up day. So this gives us a sense of how aggressive trading has been lately or not. And what I would say is, as we're kind of looking at these bigger candles right here, we're seeing a wider amount of those candles in the green, kind of above that black zero line. We have less of those candles in the red, although the red candles do have the tendency to be a bit more aggressive. So kind of one of those situations where it's 2 steps forward, 1 step back. So we'll take what we can get, but all along the way, we have been seeing a market that has been behaving itself. And as you can see here today, we didn't quite hit that high that we touched last week, but we came awfully close to it here at the end of the session here today. You'll also notice down below with this purple line that represents the pathway of the VIX. We had quite the sell-off in the VIX here today. That was about a 7% drop in the VIX. Naturally, that fear index does kind of go a little bit lower when market spirits are bullish, which they were here today. Also, I wanted to share with you that on a market breadth perspective, we had some positive vibrations there as well. Notice that we had a 90% up day in terms of total components in the S&P 500 that finished in the green. So out of the 500 stocks, we had 453 of them close in the green, with just around 50 closing there in the red. So really impressive showing there for stocks, regardless of which sector or area that you kind of call your own. We'll talk about the sectors a little bit later, but we had, everything from utilities to energy stocks rallying here today. All right, let's go ahead and now transition our thoughts on over to our normal routine, starting with chart 4B. And this will be our foregrid here that we use to kind of evaluate these major U.S. equity indices next to one another to see who's leading and who's lagging. And as we've been saying for quite some time on this video, it's the Russell 2000 that is the star of the show, and it remains to be the case here today. You can see down below here in the lower right-hand corner, Russell 2000 was up 2.4% today. Look at that candle, closing basically on the highs of the session, and obviously got the nice high label directly above today's candle. You can also see this lighter green label showing up that says yearly high today. Well, it's not just a yearly high, it's an all-time high for the Russell 2000. That was the only one of the indices here that we can make that claim for today. The other three larger cap indices are still trading just a touch below where they were at about a week or so ago. And again, a reminder that that Russell 2000 should not come as a surprise to those of you that watch this video, nor should it for those of you that attend my Wednesday morning factor-based swing trading class, where we've seen the low size factor be the leading category or the leading style within the market for really the last 2.5 months at this point. So if you've been hanging out in the small cap world, you've been loving life here recently. Now, in terms of some of the other moves, we did see the NASDAQ up 1.25% today. We saw the Dow Jones up 1.13% today. So today was a great day all around, over a 1% move higher, as of course we continue to receive the excellent news of the rollout of the vaccines here in the United States. We also heard some news that a stimulus package is kind of rumbling through D.C. With some optimism that maybe we'll actually get a deal done here shortly, before the end of the year. We'll see if that happens or not, but right now it's looking more promising than maybe what the market had believed here not too long ago. So all in all, a very strong day. You can see here that it did not impact our posture. That is the beauty of this posture setting mechanism that we use in this video, and I know many of you appreciate. Naturally, if you've made some gains in the last few weeks to months, part of that might be attributed to your regular viewership of this video and the recognition of the posture setting mechanism that is the market forecast technical indicator. Reminder to those of you that are newer to watching the video that we try to make it nice and easy for you to understand what your current posture should be using that technical indicator by just simply looking at what is the background color of the chart. You can see that at this current time, the background color of the chart on all four of our charts is dark green, and that is nothing new. In fact, this is one of the more extended runs that we've had. As an example, down below here, we went from this pink background to this dark green background on the Russell 2000 back here on November 3rd, so just before the U.S. presidential election. And so anyway, it's been a great run here, about a month and a half of strongly bullish, not just weakly bullish, but strongly bullish posture that we've had there for much of these indices. So of course that does not change on a day like today when we're up 1% across the board. Sometimes the question might be, have we gone too far too fast? Are we at a level where we've had some excesses? Naturally, with last week seeing a couple of IPOs double in a day, that is a question that is relevant. But at this moment in time, we actually don't have any overbought clusters here that we have to worry about right now. And it's not to say they can't show up later on this week, but as of right now, we still are in that bullish posture mode, and we'll let the wave of that bullishness take us into the year end. And remember, this is traditionally a seasonally strong part of the year anyway, regardless of what the trend is prior to it. But with a strong trend, with stimulus on the way, with vaccine news out there, and obviously a seasonally strong market, all that is kind of coming together right now to form a very bullish picture here, at least in the United States, and quite frankly in many stock markets around the globe. Let's go ahead and take a look at our next chart setup now, and this will be chart 4D, and this will be our 3 green arrows chart setup. This is used for trend trading purposes. Now, somewhat surprisingly, we don't have a 3 green arrows signal on any of our charts at this exact moment in time. We might very well get there here fairly quickly. You can see that, for instance, the Russell 2000, I know this is really hard for you to see because it is basically sitting on the flat line. Let me right-click and maximize this cell so that way you guys can see this a little bit better. This is so hard to see. In fact, I've rarely seen it this way myself. But here on the MACD histogram, you're noticing that you have a red arrow, and you had a couple of red bars there, signifying that we had a minor loss of momentum. It wasn't a major one. We just had prices going sideways there for a few days. But right now, associated with this candle up here, you don't see a bar down below. And the reason for that is it's basically sitting exactly on the zero line as it stands right now. So there is a very good chance that as long as there's not some sort of a major market sell-off tomorrow, that when David does the video for you tomorrow, it's likely that the Russell 2000 will go back to a 3 green arrow status as soon as tomorrow. Right now we are as close as you can possibly be to a 3 green arrows without actually having it as a result of that MACD right there. The others we don't have quite as strong of behavior in, but it's not that it's bearish behavior, it's just that it's not strong enough to currently have that 3 green arrows signal. The one of the remaining 3 that is most likely in my eyes to go to a 3 green arrow signal next would be the NASDAQ. You can kind of see here it's grappling with the same thing. Let me maximize that cell. And you'll see that we had 3 red bars here on the MACD histogram, but today we had some positive vibrations there as we rolled up. So notice the color of the bar is gray today as opposed to red yesterday. So that's telling us that we did have a little bit of a loss of momentum over the last week, but on a day-over-day basis, we saw an improvement there. And if that improvement continues, we will likely get back to a green arrow there on the MACD histogram for the NASDAQ composite here relatively quickly as well. I don't know if it's going to come as soon as tomorrow like I would expect with the Russell 2000, but it could easily be done by the end of this week. And remember, it's an important week as well. This is a options expiration week for those of you that are trying to babysit your December monthly contracts. Remember, this Friday will be your last opportunity to trade out of them. So make sure you're not falling asleep on your portfolio there, and you're buttoning it up as well as you can. You're dotting your I's and crossing your T's there, making sure that you're offloading your inventory out of your portfolios by the end of Friday's session. So right now, bullishness remains. We don't have a 3 green arrow signal on any of these charts, but I would highly anticipate that will happen tomorrow on the Russell 2000. Let's go ahead and now take a look at a longer term chart. In this case, this will be our 1040 crossover method. This is used for those of you that might have, let's say, 401k money that you can't really trade actively, that you can only make a few decisions on every quarter or so. So this is not going to catch the top or the bottom, but its goal is to try to capture the juiciest part of the bone in between, that meaty part of the bone. So you're not grabbing the ends, but you've got that middle part that you're trying to sink your teeth into, and it does a reasonably good job with that. Now, naturally, there are no perfect trading strategies out there, so if you're looking for that, you'll have to look elsewhere. You're not going to find it here. But this does a reasonably good job of making sure you're on the right side of the trade most often. And naturally, if you look at these various charts here, you can kind of see that in action. Now, the Russell 2000 is a bit of an outlier here. Remember, this is a 3-year chart that we're looking at, and you have had more chop and slop here. The 1040 crossover method may not have given you a whole lot of cheeriness in the last 3 years, because there will be times when you're buying high and selling low and vice versa. But in the Russell 2000, with the choppiness in that chart, I would guess that your results probably weren't as good as with the other charts. However, since we have had that bullish crossover take place when that orange line went up and above the blue line back here at the beginning of August, you have had stellar returns out of that small cap index right there. Whereas you have seen much more green activity on the charts of the other 3, and you haven't had to deal with as much chop and slop. So the other 3 would have dictated that you would have been largely bullish on those 3 indices for the last 3 years. Except for a few short times in between, and that would have likely led to some decent gains along the way. So right now, not a whole lot to report. Remember, we don't have posture shifts on this one all that often, so it's more just a recognition than anything else that things are still the same as they were last week when we looked at it, which is we have bullish long-term postures using the 1040 weekly crossover method that we show you here on chart 4C. All right, let's take a peek now on over to the internet. And I always like to have an opportunity to say thank you to those of you that help support this free YouTube video that you guys watch here so regularly from us at Market Scholars. And this is our Market Outlook video, naturally. Some of you will watch it directly on our Market Scholars website. And when you do, we would encourage you to click this little heart icon down below here on the Twitter graphic itself, which we can kind of embed once we load it up to our website. That will help us kind of justify the amount of time that it takes to produce these videos, which generally is at least 2 hours. If you're talking about all the research, the trade, information, the notifications, and then of course the recording of the video and the editing and all that kind of stuff that comes with it. So we don't get paid to do it, but we enjoy teaching. Now, obviously, we have an opportunity to teach all day long to our premium clients, so we don't necessarily need to teach to a free audience. So for those of you that are watching for free, one request that we have for you, and we think it's a pretty good trade-off. All you have to do is take 5 seconds out of your day to click the word like there for us on Twitter, and that will help us promote our business a little bit more and can help us justify the time that it takes to create these videos. So if you want to see these videos done as regularly as possible, please get in the habit of clicking like regularly. And I appreciate those 108 of you that did so for me last time around. I'm always trying to get at least triple digits there, and we were up and over that goal this time around. So thank you very much for that. Also, wanted to point out, some of you might be noticing in our recent popular posts over here, I also had a little bit of time over the weekend to put together the dividend growth investing post. This is something that is available for free as well. For those of you that are not one of our premium members, you have access to this dividend growth investing post over here. If you wanted to see some of those stocks that were increasing their dividends back in November, there were over 60 of them that did. I pointed out a couple of them in my class on Monday afternoon that I was particularly enthusiastic about. Leading the charge there would have been Aflac. So if you want to see that entire list of all those companies that raised their dividends in the month of November, make sure you're checking out that post that you can see kind of in our popular recent post there. Otherwise, if you're looking for it and you don't find it over there, you can always find it on your own up here under the blog, and then click on dividend growth investing, which of course I taught my dividend growth investing trading room today, where we focused on the materials sector, where we haven't had a lot of opportunity here in the last 6 months from a dividend growth perspective. But today we found an interesting choice. So if you want to see what our collective intelligence brought to our attention here today, we've had quite the string of success in the dividend growth investing class here in the last couple of months. So remember, if you're a premium or plus member, come up here to our trading rooms tab, click on it, and then you can watch the recording by going to it on the calendar there. David also taught his directional option strategies class today. Tomorrow, I've got my factor-based swing trading class in the morning, and then David's got his options inventory trading class in the afternoon. Also, while we're over here, I wanted to share with you the latest edition of the Sector Selector. Now remember, this gets put together on Fridays, so it's a couple days old at this point, but can still be relevant in terms of an understanding of what's been going on in the markets here recently. And for the second straight week, we have energy retaining its position as one of the strongest areas here within the sector rotation model that we use. Now remember, I use this graphic from a practical perspective in my Monday top-down trend trading class, where we're looking to buy stocks that are in the strongest sectors, and that portfolio hit yet another all-time high here today. I noticed a stock like Chewy up another 8% here today to a record all-time high. So if you're interested in trend trading with the 3 green arrow methodology, and you're a plus or premium member of Market Scholars, make sure you're joining me on Mondays. That's Monday morning in that particular case. But energy retained the top spot, materials retained the number 2 spot, and then we had a slight flip-flop there between number 3 and number 4. Discretionary slightly beat technology there, but technology is still one of the stronger areas of the market. Dead last continues to be some of the more defensive areas. Notice that healthcare, consumer staples, real estate, and utilities are all ranked 8th through 11th in that case, the bottom 4. And so that would be a good segue back on over here now to the Thinkorswim platform, so we can have our conversation about some 12 grid analysis. And some of you have probably recognized that when I pull up this 12 grid, I always have the defensive ones at the bottom. It's not ranked in real time as to what is strong and what is not. It just is always set up this way. But that is the reason I want the more cyclical ones on the top and the less cyclical ones on the bottom. And it gives us a little bit of a storyline about what's happening in the market right now. When you have the more mundane areas of the market, like healthcare, consumer staples, utilities and real estate, which are known as the defensive areas, the areas that don't necessarily need a red-hot economy to do well, when you see them lagging the other sectors, it is a good sign of risk appetite. And right now, naturally, close to all-time highs, lots of IPOs, lots of SPACs, lots of exciting things going on all around us. Tonight, I heard there was a big merger in the marijuana space with Afria and Tilray. So when you have that type of speculative behavior out there, it's natural to assume that the more cyclical areas of the market are the ones that are leading, and that is the case right now. You can see here on this 5C chart, for those of you that are following along at home, that there are just two pink charts on the board, and those two pink charts are utilities and real estate, both of them struggling on a relative basis. Now, keep in mind, they're both still up over the last 3 months, right? The utility space is up 5%, and I take that back. On real estate, it's down less than 1%. So let's call it break even over the last 3 months. In other words, you haven't been destroyed if you've been investing in those areas. You've just seen better returns elsewhere if you've been willing to kind of take a bigger risk within the more cyclical areas. So those two areas are the two areas that you're probably staying away from if you're a momentum-based trader. On the other hand, if you're looking for some of the best strength in the market, you're looking up here at the top areas, and you can see financials up about 16% in the last 3 months. You can see communications up double digits over that time period as well, up 10%. You can see industrials in this middle rung up about 13% in the last 3 months, and you can see energy, which has just absolutely come out of nowhere to lead this market, up 24% in the last 3 months. And remember, the returns would even be better if you were to calculate just here since the beginning of November. So part of this 3-month return that includes this 24% was actually weak for energy, right? We started over here and we went all the way down here for the first half of that period. So it makes it even more emphatic to recognize the huge move that a lot of those oil and gas stocks have had here recently. And so it's good to see them kind of come into life all of a sudden. You'll notice that their moving average is obviously green at this point in time as well, with price above a rising moving average there. And remember, that was a problem for them for a long time. We had this red moving average we were dealing with, and then all of a sudden, right here, November 9th, that was the Pfizer vaccine news day, we shot to the upside, and we never looked back there with oil and gas. So so far so good on that sign right there. But a lot of these charts look spectacular, right? It's hard to, it's like picking your favorite kid. These charts, for the most part, are wonderful bullish charts that you want to see, regardless of market conditions. You'd like to see most of the sectors carrying their weight, and that is where we find ourselves right now. In terms of the best performers just today alone, we had several of these that were up over 1%. Led higher by energy, once again, 1.97% to the upside. That actually tied the utilities, which were also up by the exact same amount, 1.97%. We also had the real estate up 1.75%. We had materials up 1.8%. We had industrials up 1.4%. Discretionary up 1.35%. Healthcare up over 1%. We had technology up 1.7%, and we had financials up 1.7%. So there was plenty of choices for us to look at today for really excellent performance. It's pretty rare to find such consistency in terms of 1% movers from an entire sector perspective, but that was the type of day we dealt with. It was a beautiful bullish day here today. Let's take a look now at our asset class 12 grid. That's chart 5A. And for this, you're going to see a couple of the similar laggards that we've been talking about for a while, in particular, the US dollar in the lower left-hand corner. That's where we're seeing our weakness, and we have been for several months at this point. And remember, our knowledge and our understanding of a weak US dollar has hopefully allowed you to make more wise decisions with your money in terms of the recognition that foreign assets are starting to outperform US assets. And remember, that's not something that's new. It's been in place for a couple of months at this point. But you will notice up here as an example that EFA, which is the foreign stocks from the developed markets perspective, up about 10% in the last 3 months. And then you got your foreign stocks from the emerging markets perspective up about 12% over that time period. So they are both outperforming the US return of about 9% over that time period. It's not that the US results have been bad. It's just you've done a little bit better if you've been willing to kind of concentrate on some of those more foreign markets out there. In fact, some of you might have caught Baidu today. I don't know if you saw that or not, but holy mackerel, take a look at this. Baidu absolutely erupted today. This is sometimes referred to as the Chinese Google, big search engine company over in China. Well, rumor has it that they're going to be getting into the electric vehicle space. And most of you are aware that as long as you hitch your ride to an electric vehicle these days as a stock, it almost gives you a green light to go higher. A lot of the SPACs these days are around EVs. A lot of the, of course, traditional EV plays like Tesla are just going nuts to the upside. So Baidu is the latest entrant in that craze apparently here, which is somewhat reminiscent to what we saw back in the dot-com bubble, where many companies were starting to associate with .com and just putting .com at the end of their name, whether they had anything to do with the internet or not, because they recognized that that's what the publicly traded equity market wanted. They were recognizing everybody else getting rich around them doing the same thing, and they said, let me get in on this. So we might have to watch ourselves here to see if we are heading down that path with EVs and everything related to electric vehicles. But Baidu was the latest beneficiary of that here today. That Chinese stock was up 14%. And remember, this is a massive company. There are other Chinese stocks out there that have already participated in this, like a stock like NIO. It's up 126% in the last 3 months. But that's a much smaller company than Baidu. Another company that is a Chinese electric vehicle company is BYDDY. Now, this one is not as liquid. It's a little bit of a bigger company. Some of you might recognize this one because it's got a large ownership by Warren Buffett and Charlie Munger over at Berkshire Hathaway. This has been one of their key investments in China for the last, about a decade or so. So it's not like they jumped on the EV bandwagon here recently. They've had this investment for a very long time. That's up 90% in the last 3 months. Some of you might have caught the Charlie Munger Zoom interview yesterday. I had to chuckle when I saw him sitting at his armchair and his value line binder sitting right next to him. So some of you saw me tweeting about that. And I had a grin on my face because I use Value Line every single week in my dividend growth investing classes. And so for those of you that want to be trained on how to interpret Value Line, that's another benefit of attending my dividend growth investing classes every week. And then we also heard from Warren Buffett, surprisingly enough, this morning on Squawk Box. Didn't really speak about the markets much, but just his general anxiety around what's happening to small businesses in the United States. Now, naturally, some of the larger businesses have done just fine. And as you can see here, Charlie and Warren's foreign investments, particularly in this case, Chinese EV-related plays, have done remarkably well in the last 3 months. All right, let's get into our trade application example now. And for that, I'm going to come on over here to, let's just pull up, let me see if I want to pull it up on 4A here. This will do. The other one I was looking at was the swing trading chart that I use. So either one I think would fit the bill for what it is that I'm hoping to share with you. And the stock that I placed the trade on, now as a reminder, those of you that are premium members of Market Scholars, one benefit that I try to give you is give you a heads up before the market closes as to which stocks I'm going to be trading and talking about in the video that night. So it gives you a little bit of an information advantage over those that are just watching the free video. we use our Telegram app for that. But anyway, I placed this trade here right before the closing bell. I wanted to get a slightly better price on it, so that's why it didn't get filled until towards the end. But nonetheless, the trade did get filled by the end of the bell here today, and the trade that I took was a bull put spread on Apple, of course, the world's largest publicly traded company, right there neck and neck with Saudi Aramco, depending upon circumstances. But what I can say is the largest publicly traded company in the United States for certain, and of course a very well-known company that makes one of the most prolific products that we have in this century that we find ourselves in. In fact, I just received my new iPhone here a couple of days ago in the mail, so I'm enjoying the new iPhone 12, and sounds like I'm not going to be the only one, because the news that sent Apple surging here today was that they're going to be ramping up production by 30% in the first quarter of 2021. So they are anticipating massive demand for their iPhones starting next year. And you can see that lit the stock on fire here today. The stock was up 5%, and you can see what that did for the chart. And it impressed me enough that I wanted to place a paper trade on it. This candle, this is a 5% move on a $1 trillion company. You can see it was important to me because it broke out above this prior resistance area that we had back here in the middle of October. So that was important. Now, this is not an all-time high, so I do want to be clear about that. It is a 3-month high, but if we were to go back, let's say, on a 1-year daily candle chart instead, you can kind of see that we had maybe about a week or so of time back here at the end of August, beginning of September, where the stock was a bit higher. But you can see this has been very constructive price activity that we've been dealing with here on Apple more recently. It's just been biding its time. It's not like the stock has gone down or anything like that. It's just really been going sideways. And today gave me that first glimmer of hope that, hey, we're going to be back in an uptrend here with Apple once again. And you can see that today's action was aggressive enough where it changed the background color of the chart from pink to blue, telling us that we now have a bullish near-term posture here that we're dealing with, in addition to the green line still in the upper reversal zone, telling us that the intermediate posture remains strongly bullish on Apple as well. So I sold the 120, 117.50 bull put spread in the month of January. And so if we factor in the credit that I received, it would put our break even somewhat close to where this 30-day moving average is right here. And again, if you need the specific execution price details and all of that, feel free to check the Telegram app if you are a premium member of Market Scholars. But obviously this market could certainly use some additional leadership from Apple out there, since it is the most influential member of the S&P 500. So to see it up 5% today, that stock alone was responsible for much of the positive vibes on Wall Street here today. So that's what I had for you. I hope you got some benefit out of listening to the analysis there and learning about what's going on in the world around you, whether it's mergers in the marijuana space, whether it's Chinese search engine companies getting into electric vehicles, or just the fact that Apple is seeing tremendous demand for its core iPhone product. I hope you got value out of checking out the conversation here tonight. If you did, make sure you click like for me there on Twitter. And David should be back with you tomorrow, so look forward to that. And I'll see many of you tomorrow in my factor-based swing trading class first thing in the morning as well. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.